Hello everyone. Welcome to today's lecture. Today we are going to cover the rest of the essay 700 series. Okay. Before I proceed for the today's essay, please, if you have any doubts pertaining to the last lecture or any of the topic of the essay, you can ask, and I will be taking up those doubts also. Also, while going through the essay 700 series, my prime focus will be on the practical side, as I said earlier in the last lectures also. So I will be covering more onto the practical applications of these standards rather than the theory part. So any doubts with respect to the last or previous essays? No? Okay. So in case if you have any doubt, you can ask, during the lecture also, and I'll be taking up those doubts. Okay. So let me start for the today's topic, essay 701. Now, essay 701 that talks about communicating key audit matters in the independent auditor's report. Now, before we deep dive into the key audit matters, let me show you how key audit matters are. What are key audit matters looks like in an audit report. Remember in the last lecture, when we discussed, okay, there are some key audit matters at that particular point in time. So those key audit matters basically, are defined and are, decided based on this particular standard. Okay. So just let me increase the size. So this is, one of the key audit matter that has been there in one of the audit report, that is impairment assessment of food and refreshment cash generating unit. Okay. One of the key audit matters. There's a history mentioned behind why this is in key audit matter and what auditor did for this particular key audit matter. But there is a key audit matter given. Now, the question comes is, when I talk about the key audit matter, the question comes is, what are these things? How, auditor can decide that, okay, a particular key audit matter is, a particular item is a key audit matter and that is required to be reported in audit report. So for that, there are some guidelines given in this standard. Okay. Now the guidelines says that in making this determination that whether a particular item, okay, shall be taken into the account for the key audit matter is not there are some conditions, and those conditions are areas of higher assessed risk of material misstatement. Means if you have any higher area, higher particular item, which item can also be a key audit matter. Significant auditor's judgment relating to the areas in financial statement. Again, areas where like a lot of significant judgment is involved. Areas which is professional judgment is involved. For example, going concern assessment, some other areas where there is a huge judgment involved. Those areas also, tend to be sometimes the key audit matter. Then the next is areas of high estimation uncertainty. So where there is a high estimations, high uncertainty, those areas also can be considered into the key audit matters. Areas that have an effect on audit of significant events, okay, or transactions that have occurred in that particular period. So for example, let's say there is one transaction, sale of a particular unit of a company. The company sold a major unit. In that case, that particular transaction where the company has sold its unit is a major transaction, and it may have an effect on the audit. Okay, the transaction might have an effect on the audit, or it's a major transaction from the viewpoint of the audit. So that transaction can also become a key audit matter. Now when I talk about some these criteria, on the basis of that I can determine the key audit matters. And basically these are those matters, key audit matters, that in auditor's judgment, okay, in auditor's judgment were of most significance in the audit of financial statement. So basically So these are those matters which are most significant, which are most significance okay, were of most significance in the audit of financial statement of current period. Current year or current period. Now, these areas, okay, which are to be considered as the most significance, are the key audit matters. Okay. Now, key audit matters are usually selected from the matters which are communicated with the those charged with governance. So, matters that are communicated with those charged with governance. Now, when do you communicate with those charged with governance? As per SA 260 and 265 talks about what? SA 265, remember? Communicating the efficiencies in internal control with those charged with governance. So SA 260 and 265, under which we communicate with those charged with governance. Okay. Now, it might be, there might be multiple factors or multiple matters that might have been already we have communicated with those charged with governance. In that case, the guiding principle, that areas that can, how we can define the key audit matter is, like as I discussed in the start, that those matters that require significant auditor's attention in performing the audit. For the auditor, for the auditor, he shall consider the following areas while considering the key audit matter or determining the key audit matter. Those are areas of higher assessed risk of material misstatement, significant auditor's judgment relating to the areas in financial statement that involve significant management judgment or estimate, effect on the audit of significant event or transaction that occurred during the period. Okay, so this is how we can actually define based on these parameters the key audit matter. Okay, any doubt till now with respect to key audit matter? Any doubt? Okay. If no doubts, let me proceed further. Okay. So now, as I told you, the key audit matters are something based on their importance, significance, risk assessment. So these are some factors on basis of which they are decided. Now the question comes is, if these are certain things like on the basis of the significance they are decided, let us see some examples for key audit matters that on the basis of which we can have further understanding. Okay, so let me show you one example. Now this was one of the example for the impairment. I'll remove this. I'll show you another example. Okay, so this is another example of a key audit matter. Okay, let's see how it is written. Revenue recognition. Refer note 32 to the standalone financial statement. So first of all, as I told you, key audit matter means these are the most significant items. Now, in the audit of financial statement, okay, so most significant in the audit of financial statement. Now, when I am talking about audit of financial statement, they might be somewhere in the financial statement, and that's why I can consider as a key audit matter. There might be some disclosure, some information, and that's why I have to refer to that particular item. So reference to that item in FS. Okay, I do provide a title for the particular item. Now, once I have the title, I have the note, what I do is next, I explain that particular item, why it was a key audit matter. See, the revenues of the company consist of primary sale of products and is recognized when control of products being sold is transferred to the customer and there is no unfilled obligation. The revenue is measured at the fair value of consideration received or receivable and is accounted for net rebates, trade discount. The estimation of discounts, incentive, and rebates recognized related to the sale made during the year is material and considered to be a complex and subject to judgments. The complexity mainly relates to the various discounts, incentive, and scheme offers, diverse range of market present, and complex contractual agreements, commercial terms across these markets. Therefore, there is a risk of revenue being misstated as a result of inaccurate estimate of discounts and rebates. If you see now, there are two things that are required to be considered here. Number one, complexity that they are talking about in recognizing the revenue. Second, the judgment or talking about risk of material misstatement. Okay, revenue is by default is material, and we also involve risk of fraud with respect to the revenue. So risk of revenue being misstated. So these are the three items based on which they have selected this as a key audit matter. Now, whenever there is a key audit matter, there is another information that is required which talks about how the auditor has addressed the key audit matter, or what audit procedures were performed to address the key audit matters. See how our audit address the key audit matters. Okay, so what auditor has replied, or how he has addressed this key audit matter: assess the appropriateness of the company's revenue recognition policies, recognition and accounting policies, including those relating to rebates, trade discounts, by comparing the applicable accounting standards. Tested the design and operative effectiveness of the general IT controls environment and the manual controls for recognition of revenue, calculation of discounts and rebates. Perform test of details, tested on sample basis, sales transaction, underlying supporting documents, reviewed on sample basis, sales agreement, underlying contractual terms, related deliveries, goods and rebates, and etc. So they will provide you that, okay, how they have answered that particular, or addressed that particular area, what test they have performed. Clear? So this is how a key audit matter is recognized. Let me show you one more quickly, and so that we can have a further understanding. See, this is a second key audit matter: litigations and claims, provisions and contingent liability. Now again, there is a reference to note 44 and 47 of the standalone financial statement. See, the company is involved into direct, indirect, and other litigations that are pending with different statutory auditors, authorities. The level of management judgment associated with determining the need of and quantum of the provision for any liability arising from these litigation is considered to be high. Point to be noted that this particular has a management judgment. Okay, and the need for determining the need, the quantum of the provision for these liabilities arising from these consideration is considered to be high, means high judgment is involved, management judgment. So one of our area was significant auditor judgment relating to the areas in the FS that involved significant management judgment. Then this judgment is dependent upon number of significant assumptions and assessment which involve interpreting various applicable rules, regulation, practice, considering precedents in the various jurisdictions. Means it involves your estimation. Okay, so significant assumptions and assessment, estimation, uncertainty. This matter is considered as the key audit matter in the view of uncertainty regarding the outcome of these litigations. significance of the amounts, subjectivity in the management judgment, whether the amount should be recognized as a provision or only disclosed as a contingent liability in the standalone financial statement. Clear? So why this is required to be recorded as a key audit matter? Because this involves your subjectivity, management judgment, okay, significance of the amount involved. These are certain things because of which they have decided to have this area, this particular point into key audit matters, and accordingly they have the test, or they have the procedures mentioned over here, that how they have performed this particular procedure and how they have addressed this particular key audit matter. Clear? Any doubt? Any doubt till now? Okay. If no doubts, then I have few questions that I'll ask from you guys. Okay. And accordingly, for example, in a key audit matter, this one, litigation one. So if I include in my audit report that, okay, with respect to the litigation, management's assessment of the litigation was not correct. Okay. Management assessment of the litigation was not correct, and there is understatement, or you can say undisclosed or underdisclosed litigation liability. Okay. Now consider amount is material. Now, if this is the case, let's say there is a case where management assessment of litigation was not correct, and there is an understatement of or underdisclosed litigation liability. So management had disclosed less. Let's say, for example, management's amount was 25 crore. But when I did the assessment as an auditor, so auditor's assessment amount was rupees 565 crores. Okay. So 565 crores versus 25 CR. So there was a huge gap. And it was identified that management has not applied appropriately the gap. Okay. In that case, the question is that whether I can have this particular point into key audit matter, because it involves high estimation, management judgment, significant risk. Okay. So all these areas are there in this. Whether can I involve key audit, this area into the key audit matter or not? Come on, guys. whether I can involve this particular point into key audit matter like they had here, litigation, but my facts of the cases are a bit different than this one. Can I involve this point into the key audit matter? So there are few things we need to understand with respect to the key audit matters. Number one, when I'm talking about key audit matter, it should not be taken as a substitute for the qualification. This particular area is a qualification. Okay, I should not be involving this area of a qualification into the key audit matters. So anywhere in the key audit matter, you will not identify that, okay, there was a misstatement, there is an, modified opinion, or because of which their opinion has been modified. No. Key audit matters are not the substitute. Remember that. So a key audit matter should not be used for a substitute for disclosures in financial statement, a substitute for the auditor expressing modified opinion. It's also not a substitute for reporting in accordance with SA 570 when there is a material uncertainty exists. So when I talk about key audit matters, they are required to be disclosed as per SA 701. But if there is any separate disclosure like SA 570, 705, 706, if you ask that, okay, there is another SA requires us to be requires some disclosure, can we combine with 701 key audit matters? Answer is no, you cannot combine. So let's say, for example, there is emphasis of matter paragraph. Can you combine with key audit matter? Answer is no. There is other matter paragraph. Can you combine with key audit matter? Answer is no. Concern. Can you combine into key audit matter? Some will say no, it's a very critical area. Our opinion is not modified, but there is a material uncertainty, there is a high risk, all conditions are getting fulfilled. Can we combine? Still answer is no. The reason, because this disclosure is required as per another assay. Okay, this disclosure is required as per another assay, and you cannot combine the disclosure requirement of another assay with another, like two different assays. So for example, SA 570 requires us to report on going concern. So, and CAM is required as per SA 701. I cannot club the reporting requirements of two SA. I cannot, no. Hence, key audit matters are not a substitute for going concern, modification, EOM or other matter paragraphs, even for the disclosure of the financial statement. We cannot have key audit matter as a disclosure. Sometimes it may be asked that, okay, can we have accounting policies which was missed by the management into the key audit matter? No. Key audit matters are for the purpose of highlighting some critical and significant areas which is there in the financial statement. So that's why I provide a reference to the financial statement. It's not a substitute for the disclosure in the financial statement. Clear? Clear, Kaushiki? I hope now your question I have appropriately answered. Okay. So key audit matter is required to be a separate section in audit report mentioning each key audit matter separately. It shall include a description why the matter was considered as the most significant and how the matter was addressed in the audit. If no key audit matter is identified, audit matter is identified or CAM are identified. Okay. But let's say, for example, if the only point you identified key as a going concern or modifications or such like that, that no other point is there. So if no CAM identified or CAM identified are already included as a modification of going concern, then provide the details with respect to the same. So you need to provide the detail, okay, these are the critical areas, but on the basis of that, we have already provided a modification. Clear? Any doubt? Any doubt till now? Okay. If no further doubts, then let me take some questions on this, important questions that will, help us to understand more on the key audit matters. Okay. Now, as I told you, significance of the determination for the key audit matter, significance of the auditor's judgment relating to the areas in the financial statement. One of the key thing is there. Okay. Now the question comes is how we can, determine the significance. Okay. How you can determine the particular item is significant. So see, significance is something it is based on, the interest or the management's involved, the judgment involved. So events or transaction that has a significant impact or effect on the financial statement, okay, or on the audit, maybe can be, or be the area of the significant auditors attention. So for example, if there is one area which requires your auditor's attention, or auditor's attention in a good amount, means that a significant area. Okay. So this is how, you can identify which are the significant areas with respect to particular audit. It may be economic related. Let's say, for example, I'll give you a classic example for the significant areas. Okay. Now, a lot of, places are, or a lot of companies are facing issues with respect to what you say, supply chain disruptions and, raw material, all those things. Now, if this supply chain disruption, let's say, for example, chip manufacturers, they are facing supply chain disruptions. Now, based on this, this can be a key audit matter because this requires a significant, attention of the auditor, that how management is trying to address this particular issue. Okay, how management is trying to address this particular issue. So by this way, you can, identify some of the key audit matter areas. Clear? Just a minute. I think there is some technical glitch. Let me check one thing.
Mr. Vinu, चेक करो ये कह रहे लाइव नहीं आ रहा है.
I think I received a comment that FR का वीडियो चल रहा है. Can you check once, sir? Okay. Okay. Okay, Kaushiki, I think it's working, and I just let me know if you can see the live lecture. you can post a comment and we will be able to know. Okay, so I'll continue. So that was about the determining the key audit matters. Now, let's take up some questions on this particular topic so that we can understand further. Okay. So the first question that I want to take up is again with related to determination of the key audit matter. Okay, so question is, during the audit of XYZ Limited, the audit team identified the inventory was valued at the cost instead of cost or NRV, whichever is less. As a result, inventory was valued higher by 4,35,000. When inquired with the management, they agreed that with respect to the mistake. However, the management denied changing the same in the financial statement, as unaudited financial statements were already shared with the banks and financial institutions for the purpose of financing facilities. Moreover, management requested audit team to disclose the same in their audit report as an additional disclosure instead of changing the financial statement. Management also agreed to provide the written representation in respect of the said material misstatement. Okay, so management provided the written representation also. Hence, the audit team finalized to disclose the said key issue as a key audit matter in the audit report, as management agreed to their mistake. However, due to some limitation, they are not able to change the financial statement. So you need to tell me whether this particular disclosure way of disclosure is appropriate, because there is a technical limitation in front of them. So based on this limitation, is this way of disclosure correct? Come on, guys. Is this way of disclosure correct? Because there's a technical limitation. Okay. However, we need to understand, even though after the technical limitations, whether this disclosure is correct or not. Come on, guys. Just a minute. Okay, guys. I think there is some technical glitch, but any which ways. So we'll continue. Yes. So basically, in the current situation, although there is a technical limitation with respect to giving the details with respect to the correct answer, the correct particular disclosure, still it is not allowed that it should be disclosed as a key audit matter rather than as a qualification. Okay. So the team should not agree and should not disclose this particular item as a key audit matter. Rather, they should disclose as a modification, because there is a requirement of modification. There is a discrepancy or misstatement there. As a result, okay, let us see the options also. The audit team shall disclose the facts and detailed description to the material misstatement identified in inventory, along with details how audit team dealt with it. Key audit matter should not be used as a substitute for the modified opinion, and hence the audit team should not disclose the material misstatement in the inventory as a key audit matter. All the material misstatement are required to be disclosed as a key audit matter along with necessary modification in audit report. Okay. And the fourth one is audit team should disclose the same as a modification in audit report along with necessary disclosure regarding material misstatement on inventory in emphasis of matter paragraph. So the correct option will be not 4 because it talks about EOM paragraph. Okay. Not 3 because it talks about key audit matter disclosure. Not 1 again because it talks about the key audit matter disclosure. It is the second where it says that okay, key audit matter should not be used as a substitute for modified opinion. Clear? Okay. Now let us see one more question. Okay, on to the same topic. Okay. So this question is basically again, will enhance the understanding of the key audit matters. Just a minute. Yeah. While designing the response to the address risk, to address the assessed risk of material misstatement in existence and completeness of the inventory, the audit team decided to perform test counts on sample basis. For the same, while attending the physical count, the audit team decided to perform test counts by tracing the items selected from management's counts record to the physical inventory and tracing the items selected from the physical inventory to the management count record. Usually we say floor to sheet, sheet to floor. Okay. Also, the audit team asked management to provide copies of management's completed physical inventory count, which will assist them in performing subsequent procedures. Okay, required to determine whether the inventory records accurately reflect actual inventory count with respect to the the lecture which is there on the BOS app. So we have a live lecture going on the YouTube also, so you can see on the YouTube till the time appropriate glitch can be rectified. Okay, so you can continue on the YouTube meanwhile with me. Okay. So till now in this question there was a inventory count. We were talking about inventory count. However, management contended that the auditor is allowed to attend the physical inventory count, but they are not allowed to perform any other procedure during the physical count. However, management agreed to share the copies of management's completed physical count, inventory count. Okay. So management shared the copies of the completed physical count with them. Now, when inquired from management regarding the denial to the auditor from performing additional procedures, Along with attending the inventory count, the management explained that the inventory consists of very unstable chemicals and inflammable gases, which require handling with skill and care. Any carelessness in the handling the inventory can result into catastrophe. As a result, due to safety standards and policies, the management cannot allow the auditor to perform additional audit procedures on to the inventory. Kindly guide the audit team in the current scenario. Okay, so you need to guide the denial to perform audit procedure to obtain sufficient and appropriate audit evidence regarding existence and completeness of the inventory. We'll come to the first point later on, but first let's see the second one. Reporting and communicating regarding the impact of management denial at appropriate places. If the auditor concludes that the significant difficulties were encountered in performing additional audit procedures, however, after performing additional audit procedures, the inventory records do not contain any material misstatement. So, how will you deal with this particular reporting requirement? How will you report? How will you report this particular requirement? Come on, guys. One important update, guys. I think the glitch has been rectified, and on the BOS app also now you can see the live lecture. And I'm getting your queries also, so don't worry on that. So let's say, for example, now when we talk about reporting and communication in this current example, so see, there were significant difficulties. We were not able to perform appropriate audit procedures. However, based on the additional audit procedures, we do not identify any material misstatement. As a result, I can say that there is no need for modification. Okay, I can say there is no need for modification, but there is a need for separate disclosure, because this was a significant area where significant auditors attention was required, and we had to perform some other audit procedures. Okay, so in that case I can say, okay, this can be reported into KAM, key audit matter, because it's not a substitute for the modification. We are not modifying our opinion. We are just highlighting the difficulties and the nature of the what you can say inventory, because it's a material one. Number two, there was a significant difficulties and complexity involved with respect to counting the inventory, and that's why we want to bring to their attention that, okay, this is a key audit matter and how we have dealt with this key audit matter. Clear? Any doubt? Any doubt till now with respect to key audit matters? Okay. If no further doubts, then I think we can proceed to the next one. Now, see, in this case, there is one small alternative also that I want to identify as of now in point number 2. Okay. Reporting as per SA 706 EOM para. But for that, there are certain conditions that will apply. Okay, and those conditions we will understand when we'll discuss the SA 706, that how any item can be disclosed into other EOM paragraph. So this is an alternate option. Okay, but again, subject to the conditions apply, this can be done, but for this we'll understand which are the conditions which can be applied in this case for that are required by SA 706. So I hope this has given you a good clarity on the key audit matters. Okay, now let's move to the next topic for today. Basically, so this was key audit matters. Now the very important part that of today's topic is SA 705. Okay, SA 705 talks about modifications basically. Now, when our audit report contains modifications on any of the matter at that particular point in time, we are required to follow SA 705. And accordingly, modifications are required to be disclosed in an audit report. Okay. So let us see quickly how modifications can be reported. So first of all, when I talk about modifications, basically there are three types of modifications. One is your qualified opinion. That is also a modification. Okay. Then your adverse opinion, that is also a modification. Then your disclaimer of opinion. Then it's a disclaimer of opinion. Okay. Guys, just one important update that now it's on the now in the app also, it's live. You can see on the app also. So it will be the live lecture is available on the app also. Okay. Now there are three. I was on the modification. So there are three types of modifications. Okay. One is your modification, qualified opinion, adverse opinion, and disclaimer of opinion. Qualified opinion is when auditor has identified material misstatement or is not able to obtain sufficient and appropriate audit evidence of which the impact is material but not pervasive. Okay, but not pervasive. So if the impact is material but not pervasive, then you can say that you can have a qualified opinion. Now the second area is the adverse opinion. Okay, in adverse opinion, what is the scenario is when the auditor has identified material misstatement of which the impact is material and pervasive both, that becomes my adverse opinion. And the third is disclaimer of opinion, is when auditor is unable to obtain sufficient and appropriate audit evidence, the potential impact of which is material and pervasive both, or the auditor when he has identified that there are multiple uncertainties and because of which it is not possible for him, okay, because of which it is not possible for him to form an opinion on the financial statement. I cannot form an opinion because there are too many uncertainties. I cannot certain, or I cannot, with certainty, I cannot bring the numbers on of the financial statement because there are too many uncertainties. Okay. Also, if the management has imposed limitation on the scope of audit, then we have to request the management to remove the limitation. If management does not remove the limitation or refuses, then you can consider impact on the audit opinion, like whether the impact is material or pervasive both. If yes, then again disclaimer of opinion. Okay. Now see, now the question comes is what is material and pervasive, how we can define the material and pervasive things. So let me explain you with in chart so that you can have a good understanding. So let's start with the modified opinion. Okay, and as I said, there are three types of modified opinion: qualified, adverse, and disclaimer. Now in qualified opinion, I should have misstatement that are material. Misstatement that are material, but not pervasive. Okay, so if I have a misstatement which are material but not pervasive, in that case, I will say it's a modified opinion, qualified opinion. Now the question comes is, what is material and what is pervasive that we are talking about? Okay, now when I talk about material is something you define based on the materiality. Okay, material is something you define on the basis of the materiality, and we already have one standard on the materiality. Okay, materiality in planning and performing an audit, that is SA 320. So when I talk about material, that is required to be considered as per SA 320. That is fine. Now coming to the pervasive, what is pervasive? When I say it's not pervasive, what I mean by that? Okay, pervasive is a term that is used in the used with respect to the misstatement. Okay, now when I say this is not pervasive, means the possible effects of this misstatement on the financial statement. Okay, the possible effect of this misstatement on FS, okay, that are yet to be detected or that are still to be detected due to inability to perform any other procedure or any other procedure to obtain audit evidence, is not major. Okay, it's not major, then that is not pervasive. Means when I say an item is a pervasive or a misstatement is pervasive, means that item or the misstatement can have other impacts, or item or misstatement can have impact in the financial statement in such a way that that there can be items which are not still detected because of I have not obtained, or I was not able to obtain sufficient and appropriate audit evidence. Means the misstatement is not confined to a particular area, but it is it can be related to multiple areas, but I'm not able to ascertain. Reason because I do not have sufficient and appropriate audit evidence. Okay, or it can relate to a substantial portion of the financial statement, or it is fundamental to the user understanding. So if any misstatement is of such nature, then that particular misstatement becomes pervasive. I'll write it down over here. So when I talk about pervasive, okay, means that the possible effects of a misstatement of the misstatement or actual effects of a misstatement on financial statement are such, okay, are such that that they are not confined Not confined means not limited, basically. Not confined to specific areas. Okay. Elements, accounts, or items in the financial statement. Second, if confined, if we are aware, because they are, if they are, actual effects and we know where the effects are. Okay. If they are confined, then they represent a substantial portion okay, of the financial statement. The third one, in relation to disclosure, let's say it's not in relation to the amounts or the calculations or any of the particular area, but it is related to the disclosure. If it is related to disclosure, okay, then this disclosure was fundamental to user understanding. Okay. So three things. If the possible effect of a misstatement or actual effects are such that they are not confined to specific areas, because or are if data that are not detected are not confined to a specific area, if detected and identified, then they are representing a substantial portion, and if they are related to the disclosure, then disclosure was fundamental to the understanding of user, then the impact of the misstatement can be called as a pervasive. Clear? Now this was in qualified opinion that are material but not pervasive, and this is a definition of pervasive. In adverse opinion, when I talk about an adverse opinion, it is both material and pervasive. And in disclaimer of opinion, first of all, I'm unable to obtain sufficient and appropriate audit evidence. That's why there's a disclaimer of opinion. But the possible effect of this, not able to obtain sufficient and appropriate audit evidence is material and pervasive. Clear? Any doubts? Any doubts? Okay. If no doubts, then let me show you a chart which can help you to understand basically in which case which type of opinion should be issued. Okay, let's say for example result of testing is there. Now if you have obtained sufficient and appropriate audit evidence and there is no material misstatement in financial statement, you issue unmodified opinion as per SA 700. fine. But if there are material mistake, but there are misstatement in financial statement, and if they are not material, then again you issue unmodified opinion because misstatement are not material enough. But if they are material, then you need to understand whether they have a pervasive effect or not having any pervasive effect on financial statement. If they have a pervasive effect, then adverse opinion as per SA 705. And if they do not have pervasive effect, then qualified opinion as per SA 705. Now, let's say, for example, you are not able to obtain sufficient and appropriate audit evidence. In that case, you need to check the potential impact on financial statement. If it is material, but material, and you need to check whether it's a pervasive with the material or not. If material and material plus pervasive, then SA 705. Material but not pervasive, then SA qualified opinion as per SA 705. If it is material, okay, and pervasive, or multiple uncertainties are there, or impact cannot be identified, then disclaimer of opinion as per SA 705. So this is how the opinion works. Let me show you one disclaimer of opinion example so that you can and qualification example, you can understand how in actual audit report we disclose these items. So this is one of the audit report. Okay, see here the opinion, the word, remember in last audit report we saw the word opinion was written. Here it is disclaimer of opinion. And earlier we used to have a basis of opinion, now we have a basis of disclaimer of opinion. So how it is written? We are engaged in the audit. So we are engaged to the audit of standalone financial statement of a particular company. Do not pay focus on the company name. The statement of profit and loss account, changes in equity, cash flow statement, summary, significant accounting policies, and all those stuff that will remain same that we saw in SA 700. So this is as per SA 700. Fine. The subsequent paragraph, we do not express an opinion on the accompanying standalone financial statement of the company. Do not express an opinion. That goes for my disclaimer of opinion. Why? Because of the significance of the matter described in the basis of disclaimer of opinion section of our report. And earlier in unmodified opinion, we used to write that we have obtained sufficient and appropriate audit evidence. Here we have written we have not been able to obtain sufficient and appropriate audit evidence to provide a basis for audit opinion. Accordingly, the wordings will change. Now, basis for disclaimer opinion, they will provide what are the basis. A lot of basis are there. Everything is mentioned in the basis, but if you see in summary all the basis, okay, you will see the critical words like they were unable to obtain evidence, they were unable to conclude, they were unable to understand and identify things like this way. See, in the view of foregoing, we are not able to obtain sufficient and appropriate audit evidence, or there were limitation management and limitations and inability. So there was a limitation by management. Okay, so there in all the things you will identify, okay, that they have mentioned that they are not able to obtain sufficient and appropriate audit evidence. So based on which and the items are not many, because of which it becomes material and pervasive, and that's why they have issued disclaimer of opinion. See, I'll show you somewhere also. This is the same audit report in the continuation. Okay. So we have not been able to comment on the completeness, appropriateness of the balance in relation to these subject matters. Or if you see over here, deficiencies in the document or inability to express any view on the documentation, then we have not been able to comment upon the completeness, correctness, and adequacy of such provisions. So they were not able to comment, and they were not able to gather sufficient and appropriate audit evidence because because of the underlying situation. Because of the underlying situation, they were not able to do that, and hence, accordingly, they have issued a disclaimer of opinion. Clear? This is how the disclaimer of opinion wordings are there. Now I'll show you with the qualified opinion. I'll show you one good example of a qualified opinion with material uncertainty paragraph. Okay. Again, this is basically, for the consolidated financial statements. So accordingly, I have, there will be, might be, some changes in the wordings. See, so earlier we had qualified, we had opinion or disclaimer of opinion. Now we had the word qualified opinion. Okay, so they will say all that is required by SA 700, and then in our opinion, according to the explanation given to us, except for the effects or the possible effects of the matter described in the basis of qualified opinions, means except for this effect, except for this. Okay, except for this, what they are saying is the things or the financial statement are presented in accordance with the requirements and given true and fair view. Means except for the things that are mentioned in the basis of qualified opinion, everything is fine. So that is the one of the thing in qualified opinion, subject to the items, like subject to certain items, you give a good true and fair view. So that's an qualified opinion. Subject to a particular item, you give a true and fair view. And when I talk about basis of qualification, I'll show you the basis of qualification, how it is there, so that you can get an understanding of the basis of qualification also. Okay, see, we draw attention to this particular note of consolidated financial results regarding non-provision of interest amounting to this much lakh and this many lakh for the quarter and year ended March 31, 2022 respectively. Okay, and this much lakh up to March 2021 respectively on the borrowings of wholly owned subsidiary Vidarbha Industries Private Limited. So just we'll ignore the names as of now. Just I'm showing you the basis of qualified opinion. Okay. So, and everything they will say why this is a non-provision as per Ind AS, as per AS, and everything they will explain in detail. Okay, and they will assess the impact that the respective losses before tax of the group for the quarter year and ended would have been higher by equivalent amount. Accordingly, the net worth of the group would have been lower by this much amount. Okay, respectively. And there is another qualification that will be there, on the basis of which they are issuing qualified opinion. So because these are not pervasive, but they are material enough to be part of the qualification, not pervasive, and hence they have issued qualified opinion. So this is how the wording for the qualified opinion works. Clear? Any doubt with respect to the qualified opinion or adverse opinion or disclaimer of opinion? Now, one more thing I want to highlight here is, see, when I talk about qualified opinion or adverse opinion, okay, in qualified opinion, you saw subject to certain things, everything is good, true and fair. The same I cannot do in adverse opinion. When I'm issuing an adverse opinion, I am not required to comment on other items, because in adverse opinion, I say the item or the misstatement has a material and pervasive effect, and that's why I cannot say that subject to this item everything is good and fair. Okay, in adverse opinion I cannot do that, and hence accordingly in adverse opinion, I do not express true and fair view. That's an basically adverse opinion. And in disclaimer of opinion, I say, okay, I'm not able to, issue any opinion because of this particular reason, XYZ reason. So in adverse opinion, I should not give a true and fair view. In qualified opinion, subject to certain things, I give a true and fair view. And in disclaimer, I'm not able to give any opinion because it's a disclaimer. Now, in case of any modification, okay, in case I'm modifying my opinions, okay, so before I do a modification, before I introduce a modification, I need to communicate with those charged with governance or management with respect to that modification. So in case an auditor expects to modify the opinion, then he needs to communicate the modification and details to the circumstances leading to modification to those charged with governance. Clear? Any doubt? Any doubt? Okay. So any specific note that you want to see again, Kaushiki? I can show you that particular chart or something if you want any specific one. Okay. So if no doubts, then we can discuss some questions on this particular topic. Okay. Now, there is one question that I want to discuss, and we have already seen that particular question also before. But that particular question has had two parts, and one of the part is this. Okay. Let me bring on the screen, on the screen that particular question. Okay. Remember, we saw this particular question earlier also. Abhinandan Limited, there was a village, there was a National Green Tribunal, okay, and there was an investigation wherein, upon gathering further evidence, it was identified that they were violating environmental laws. We discussed in the last lecture. Company received a notice from the National Green Tribunal, okay, levying a penalty of rupees 500 crores, where the unaudited turnover was 100 crores and the profit was 35 crores. The company provided this particular note in the financial statements. Now we were required to report on this particular area. Okay, so again I'll just summarize the question. There was a company, Abhinandan Limited, okay, they violated environmental laws. National Green Tribunal conducted an investigation and they were identified guilty. Once they were identified guilty, National Green Tribunal levied the penalty of an amount equal to 500 crores. The unaudited profit for the year was 35 crores and the turnover was 100 crores. Now, company provided this particular disclosure in the financial statement. Accordingly, we were supposed to report on this matter. Now, you tell me whether this is a qualification or an adverse opinion. In this case, what you will do, whether you will issue qualification or an adverse opinion. Whether you will issue an qualification or adverse opinion in this case. So last time we discussed based on the going concern related topic on this area. But now we need to discuss whether it's a modification. If modification, yes, then which type of modification? Come on, guys. If this is a modification, then which type of modification should be this one? Come on, we have already discussed how we can decide about the modification. If this is a modification, then how we can decide the which type of modification is this one? Okay, so see, when I'm discussing about a modification, what I need to do is I need to understand what is the impact of the modification. Okay, here I can say the impact is material. Impact is material, that is for sure, because by the way of above. Now the question comes whether it's pervasive or not. Remember, we talked about disclosure. In case of disclosure, what we need to do is we need to understand if this disclosure was fundamental to the user understanding, or the impact of the disclosure is in such a way that it is necessary for the users to understand about the particular thing, about a particular item. So if that disclosure is fundamental to the user understanding, okay, then that makes that particular non-disclosure as a pervasive. Now, if I say this disclosure is fundamental to the user understanding, if this disclosure is fundamental to the user understanding, which they have omitted or they have not provided appropriately, then this will become material and pervasive both. Reason because, and why I can say this is fundamental, because this is impacting going concern. Hence, I can say this is fundamental to the user understanding, which they have omitted. As a result, this becomes pervasive. It was material earlier. We identified it is material based on the amount. Now we say it's material and pervasive both. And hence, I will issue an adverse opinion. And any which ways, there was a going concern impact. And based on that also, I was supposed to issue an adverse opinion. But this is how we understand whether the impact is material or pervasive. Material but not pervasive, or material and pervasive. In case of disclosures, we need to understand whether this is fundamental to the user understanding. If yes, then it has a pervasive impact. And how I can say it's fundamental to the user understanding? Because it talks about the going concern. It does not reflect the appropriateness of the current situation, and it can have a very big impact on the user understanding. Clear? Any doubt with respect to this? Any doubt? See, this is how I need to decide whether it's a material pervasive or not. Any doubt till now with respect to this topic particularly? Okay. If no further doubts, then what I can suggest is we can take a 10-minute break and we can gather back after the break and continue the rest of the topics. Okay. Let's take a quick 10-minute break and we'll gather back quickly. Hello everyone, welcome back. So till now we discussed about the key audit matters and SA 705 about the modifications, and in which we saw the qualified opinion, adverse opinion, basis of disclaimer opinion. Any doubt with respect to this? So let's say there are a few doubts. Let me cover that. So in this particular question that is there, the company said that it will be in favor of the company. So shouldn't we show as a contingent liability? See, there is a penalty of 500 crore. If you read the question, in that we, I specified that particularly that in this question that it was identified that the company was dumping toxic solid waste. So they were, they were following some things which were non-compliant to the environmental laws. So it was identified and a lot of damage was already done. So based on the facts, company said that, okay, it will be in the favor, but the facts of the case were saying something else. And hence it should not be disclosed as a contingent liability. So again, yeah, there is one more question on the same thing is, if the company believes that they will win, that's why they have not made the provision, isn't this correct? We discussed the same thing as a 570 also. So see, when I'm particular, there is a case, there is an assessment. Okay, there are two things you need to consider. And even, there are 3 essays which will come into play. Okay. See, first of all, essay 570, which talks about going concern related things. Okay. How going concern assessment is required to be done by the auditor. Then another essay that comes into the picture is with respect to the fair value estimates, auditing accounting estimates, including fair value estimate and related disclosures. Now here there is an involvement of an estimate, and in that, remember, we discussed about auditors point estimate or auditors estimate range estimate, wherein auditor is required to develop an estimate. Now based on the facts of the cases, let's say for example I apply, okay, SA 540. SA 540, I apply 540, I get an auditor's estimate. Okay, based on auditor's estimate, I identified no, there should be provision. This auditor estimate then I used for SA 570 for going concern assessment. And I understood the current disclosure is inappropriate or inadequate, basically. Okay. If the current disclosure is inadequate, I went into the 570, I understood the going concern assessment, I performed the going concern assessment, and they came to the conclusion that the current particular going concern assessment that is performed by the management is not appropriate, plus the current disclosure is also not appropriate. Okay. In that case, I understood, okay, this is a fundamental to the user understanding, this particular disclosure, which is not appropriate, and accordingly, I issued my opinion. So it's not only the one essay which comes into the picture, it's a 3 different essays where you need to understand the impact of a particular disclosure. So management can have their assessment, their estimation, that is fine. SA 540 also says that the management assessment should be there so that you can compare your assessment with the management's assessment or management estimation with your estimation. So this is a management estimation. It is not necessary that the management estimation should always be right. So once you will identify that, okay, management estimate, it's not correct, you will inform them to change the, disclosure and, to have a correct estimates or correct disclosures. If they do it, fine. If they don't do it, then that's an issue. Clear? Any further doubt on this? Okay. If no further queries, then I'll suggest to move on the next topic, that is SA 706. Again, all these essays that I'm talking about are linked together. Okay, and we'll see how. So once we'll discuss SA 706, then we'll also see, some of the disclosure requirement questions, and then see how it is related together. Okay. Now SA 706 talks about EOM and OM paragraph, that is emphasis of matter and other matter paragraphs in audit report. So till now we saw SA 705 which deals with the qualification, SA 701 which deals with the key audit matters. Okay, we saw in the last lecture SA 700 which talks about the whole audit report. Now we'll discuss about the EOM and OM paragraph. Okay, before I jump into EOM and OM paragraph, okay, or the details of the standard, I show you the EOM and OM paragraph first in audit report, how it is there. Okay, and what is that is particularly reported in that. So this is from the one of the audit. Okay, the EOM paragraph, emphasis of matter paragraph. Now under this emphasis of matter paragraph, if you see what auditor has written is, again this is part of audit report, so it is written by the auditor. What auditor has written is, we draw attention to the note 14 of the statement regarding to wholly owned subsidiaries. First, again, we draw attention to the note 14 of this statement. Means they are talking about certain item which is present in financial statement. So items present in financial statement, they want to draw attention to those items. So draw attention to items present in financial statement. Very important. Draw attention to the items that are there in FS. Okay. Regarding to wholly owned subsidiaries of the parent company, XYZ, don't go on the name. I'll just, as of now, for ignore the names, have changed the method of depreciation from WDV to SLM in respect of its certain major asset in their standalone financial statement with effect from 1st April 2021. The said change in the method of depreciation has been carried out for a reason more fully described in the said note, and it does not have any impact on the consolidated financial statement. Point to be seen that it does not have any impact on the consolidated financial statement. So this is from the consolidated financial statement. So accordingly, the words are there. So it does not have any impact. Okay. So I will comment from here. So it does not have any impact on the financial statement. Means this is not a point of qualification, as I can say. This does not have any impact. That is no misstatement. Means this is not a misstatement, at least we are talking about over here. Okay, no misstatement. On the consolidated financial statement, financials done in the view of SLM method already being followed by group while preparing the consolidated financial statement of the group. Our opinion on the consolidated is not modified in respect of the above matter. Again, is not modified. Reason because there is no statement, then there is no need to modify. Simple. Okay. Now, what we understood from this particular point is that EOM paragraph that we are seeing over here, okay, EOM paragraph is something to draw the attention of the user to a particular item which is there in the financial statement. Okay, EOM paragraph is the paragraph to draw the attention of the user, okay, on the item of a financial statement, okay, on which we do not have a modification, but we want to just draw the attention. Now, if you want to draw the attention, there should be something in background why we want to draw the attention. Okay. So if you want to draw the attention, then there should be some background for this. Now, that is the requirement. Basically, we will discuss about why attentions are drawn on certain items. So in case of EOM paragraph, okay, EOM paragraph, what is the use of EOM paragraph is that if auditor considers necessary to draw a user attention to the matter already presented and disclosed in financial statement. As I said, the matter is already there in the financial statement, and that in auditor's judgment is of such importance that is fundamental to the user understanding. Okay, he thinks that's a fundamental to the user understanding, and it is necessary to bring his attention to that particular point of underlying FS. Then he can provide the reference of that particular item in EOM paragraph. Again, items which are present in financial statement, your auditor wants to draw attention of the user because that item are fundamental to the user understanding. Clear? Okay, so these are the matters where it's fundamental to the user understanding. Okay, now if it is fundamental to the user understanding and we want to just draw the attention, there is no modification, then we should not be modifying our opinion. That's the last slide. Our opinion on the consolidated financial statement is not modified in respect of the above matter. So this is not a way to disclose a modification. Means it should not be used to disclose a modification. So not required to modify the opinion, and accordingly, it should not be used as a substitute for the modification. Clear? Again, the matter should not be a key audit matter also. The matter should not be also key audit matter. Reason because this is something we are disclosing because we want to draw attention. It is not necessary that we face difficulties. It's not necessary that may involve significant judgment. Now over here, see, what is the method? Method is, what is the issue over here is change in the method of depreciation, and group was already following SLM. So there is no impact on the consolidated financial statement. If there is no impact, means there was no complexity, no further audit procedures required, or no activity was significant activity or estimations were required. In this case, means the matter is not of such nature that it can be disclosed in the key audit matter, but still it is necessary to understand the depreciation amount and the fixed asset amount, and it is necessary for the user, for us to draw the user attention on this particular point so that they can understand depreciation or fixed asset clearly. That's why it is into the EOM paragraph. I hope I'm clear. Any doubt? Any doubt? You can understand further on the EOM side. Let me bring to the screen. So this is again from one of the audit. It was from the same company of the previous year. Over there also they had this particular EOM matter. So at that particular point in time, see, it was for April 2021. Again, same. It's, they will draw attention to the particular note of the consolidated financial statement regarding to wholly owned subsidiaries of the power of the parent company, because there was change in the method. And if you see, they still say that, it does not have any impact on the consolidated financial statement in view of SLM. So means it's not necessary that in 1 year, if you have issued a emphasis of matter paragraph, in subsequent year, if it is the same item, it will not be required. No, it is not that like that. It will be still required for that particular purpose. Okay. So that is something EOM paragraph, wherein it is necessary for the fund. It is necessary to draw the user attention to the matter already presented and disclosed in the financial statement. That is, in auditor's judgment, is fundamental to the user understanding. So there is one doubt. If we are not able to obtain sufficient and appropriate audit evidence and impact seems not material, then what should be done? See, if you are not able to obtain sufficient and appropriate audit evidence and the impact is not material, then in that case, if the impact is not material, first of all, it will not be a modification. Reason because it will, be part of either uncorrected misstatements. So we prepare a sum, or it's known as a summary of uncorrected misstatement, and it will become part of that particular sum if it is not material. But it will not be a modification or reason for the modification. So there is question, for how many years the same EOM can be shown? See, if there is why it is coming in the 2 years. In one of the year, it is part of the main year, the current year. In second year, it will be part of, in subsequent year, it will be part of the previous year, the comparatives. That's why you can see in 2 years the same EOM. This is from the FY22. That was from the FY21. So accordingly, if it is a coming in the comparatives also, it can be shown. So if that particular item is still there in your what you can say, audit report or financial statement, if that particular item is still there, in that case you can show that particular item. Clear? Any doubt? Okay. If no doubt, let me show you one more thing. See, this is one more paragraph, EOM paragraph, and I'll show you some one more part of that paragraph from one of the audit report. In this, see, we draw attention to the note 6 of the consolidated financial results. Sorry, of consolidated financial results regarding the applications made by 2 subsidiaries of holding company before NCLT for revision of their standalone financial statement for the year ended March 31, 2018, and the restatement of the comparative consolidated unaudited financial result of the group for the quarter ended 31st March 2019. For the reasons stated therein, means again there is certain note for which there's a user attention is required to be drawn on that, because there was some request. It's not a complex area, it's not something which requires a modification, but it requires some user attention. Again, the second area, we draw attention to the note 12 on the consolidated financial result in regard to the management's evaluation of COVID-19 impact on the future performance of the group. Our opinion is not modified in respect of above matters. So this is how the EOM paragraph is reported. Okay. Now, the second, that was one of the parts of the SA 706 reporting on the EOM paragraph. Now, the second part is other matter paragraph. Okay. OM paragraph, we usually call it. Now, we need to understand what are the things that are required to be reported in to other matter paragraph. See, till now in EOM paragraph, the things that are reported are part of the financial statement. Okay. They are something which are already present in the financial statement, and we want to bring the attention of the user onto that particular area. Now, in other matter paragraph, okay, in other matter paragraph, what is the scenario is, in other matter paragraph, what happens that these items are item of that nature which are related to the audit procedure. Okay, which are related to the audit procedures, and auditor want to bring the attention, and auditor wants to bring the attention of the user to that particular matter. So let me show you. See, other matter paragraph, if auditor considers necessary to communicate matters other than that are presented and disclosed in financial statement, that in auditor's judgment is relevant to the user understanding of audit, auditor's responsibility or audit report. In EOM paragraph, what we were discussing is matters that are necessary to understand the items which are there in the financial statement. That is the emphasis of matter. But if you want, or if you want to make user understand something with related to the audit, auditor's responsibility or audit report. Okay, auditor's responsibility or audit report means on the side of the auditor. In that case, it will fall part of other matter paragraph. We have already discussed other matter paragraph disclosure somewhere else. Quickly tell me where we discussed this other matter paragraph. Which was that area where we discussed the other matter paragraph? Come on. We have already discussed at one of the area that this is required to be disclosed in other matter paragraph. Come on, guys. Which is that particular area that we have already discussed matter paragraph? Come on, guys, pretty easy. We have already discussed in one of the lecture about the other matter paragraph and its disclosure. So, which was that particular point where we discussed that it is necessary to have the disclosure in other matter paragraph? Come on, guys. Which was that particular point where we discussed that the disclosure is required to be done as a other matter paragraph in previous lecture? Remember something we were discussing, SA 600, principal, component. Remember that in case where we have relied upon the work performed by another auditor, that's the component auditor, we will disclose that these the audit of these financial statement is not performed by us but by another auditor. We have relied upon the same. The total net asset, profit, and cash flow from those particular entities is this much amount. Remember something that we discussed with respect to the other matter paragraph in SA 600. So in SA 600, we discussed that, okay, which are the areas we are required to have in the other matter paragraph. Let me show you one example so that you can, remember that particular one. See over here, other matters, which says that we do not audit the financial statement of 33 subsidiaries whose financial statement reflect total asset of rupees this much amount at March this one, total revenue this much, total net cash outflow this much lakh for the year ended as on date, as considered necessary in the financial statement. Remember this particular whole area we considered or we discussed in SA 600 of other matter paragraph. Remember something? So other matter paragraph requires the disclosure with respect to you can say items which are necessary for the user understanding. These are the items which are necessary. It's necessary for the user understanding of the audit, auditor's responsibility or audit report. So this item is necessary, you can say, for the user to understand what is our responsibility as an auditor and with respect to the where we have relied upon. So it's related to the audit basically. Okay, it's related to the audit. That's why it is into the other matter paragraph. I'll show you one more example of the other matter paragraph. See, this is one more example of other matter paragraph, wherein the consolidated financial statement includes the group share of net profit after tax this much, comprehensive of this much, as considered in the consolidated financial statement in respect of one of the joint venture whose financial statement and other information have not been audited and whose unaudited financial statement and other unaudited financial information have been furnished to it by the management, and our opinion in so far it's relates to the amount disclosed in respect of the joint venture. Okay, a report in terms of subsection 3 of such unaudited financial statement, it's solely based on that unaudited financial statement. And in our opinion and explanation given to us by the management, these financial statement and other financial information are not material to the group. Our opinion on the consolidated financial statement and report on other legal regulatory matters below is not modified in respect of above matters. Again, very important. Not modified means if I am including any item into the other matter paragraph, I am not required to modify my opinion. I am not required to modify my opinion. Clear? So modification is not required basically. No modification is required. In any of the case, whether it's the other matter paragraph or the emphasis of matter paragraph, modifications are not required, and hence It is not a substitute of SA 701, SA 705, or any other disclosure which is required under SA 570 or like that way. Clear? So this is other matter paragraph. Any doubt? If no further doubts, then let's go to some of the questions and understand further this topic. Okay. So there is, let's see one of the question. Difficult Books Limited was engaged in manufacturing of active pharmaceutical ingredients due to changes in law and regulation. Every company engaged in manufacturing of active pharmaceutical ingredients would now require production capacity license, which will restrict the production of companies. Management of the company assessed that the impact of the change in law over the financial position of the company and appropriately disclosed in the same has appropriately disclosed in the financial statement. Means disclosure is appropriate, okay, in the financial statement with respect to this. Now, audit team of the company evaluated management disclosure and found it to be appropriate and sufficient. So they found it is appropriate and sufficient, basically. Okay. However, considering the said matter as the most important and fundamental to the user understanding, okay, regarding the financial statement, audit team decided to disclose the same in other matter paragraph. Because it was most important and fundamental to the user understanding, they decided the same to be disclosed in the other matter paragraph. You as an engagement partner of the audit team is required to guide the audit team by selecting the appropriate answer from below. Which are the appropriate answers? These are the ones. The audit team should discuss the same as a key audit matter, disclose the same as a key audit matter, as it involves significant estimate and judgment. The audit team should disclose the this under as other matter paragraph. So this says as a key audit matter. This says as an other matter paragraph. Okay, because it is relevant to the understanding of the user. This the said matter is already disclosed as and presented appropriately in the financial statement and is of such importance that is fundamental to the user understanding of the financial statement and is required to be disclosed under emphasis of matter paragraph. Auditor has identified that disclosure is inappropriate, so and hence the matter is required to be qualified in audit report. Again, so what is the case is Difficult Books was engaged in manufacturing active pharmaceutical ingredients and there was a change in law, something new required, that is a production capacity license. Based on this license, management company assessed there is a change in law over the financial position and appropriately disclosed the same in the financial statement. Audit team also evaluated and they did not identify anything inappropriate or they found it appropriate and sufficient. So audit team evaluated the management disclosure and identified that is sufficient and appropriate. The disclosure is appropriate and sufficient. So from the below, you need to select one answer, which should be, how should be disclosed. Whether this is related to the other matter paragraph, whether this is a key audit matter, whether it should be disqualification or whether it should be EOM paragraph. Come on, guys. If whatever answer you give, also provide the basis why. Why you think that this should be disclosed at this particular item? Why it should be disclosed as that particular item with reason? Come on, guys. Pretty easy. We have already discussed this. What and how should the disclosure be, and what is the reason and basis for that particular disclosure? If I say EOM paragraph, then why EOM? If I say other matter paragraph, then why other matter paragraph? I need with the reason. So, correct, Kaushiki. See, if that particular item, if already disclosed in the financial statement, let's say, if the item is disclosed in the financial statement, then that particular item will not come into the what you say, emphasis other matter paragraph, because in other matter paragraph the items comes which are of the related to the auditor's responsibility or audit report. Okay, now here the item is already there in the financial statement, means other matter paragraph will not be the correct option. Key audit matter, now this should involve a significant estimate or judgment, but this is only a disclosure with respect to the change in law. Okay, an appropriate and sufficient disclosure has been made by management. So again, this is not a key audit matter. The disclosure was appropriate, hence there is no need for qualification. So the correct answer will be EOM paragraph, because it's fundamental to the user understanding change in license and how it is going to impact the company's financial position. Clear? Let us see one more question. During the course of audit of ABC Limited, the audit team identified misstatement of 5 lakhs. Okay, so there was misstatement in the valuation of inventory. The total value of inventory at the year end was 1 crore 50 lakh. They identified misstatement of 5 lakh rupees, and the performance materiality was 4 lakh 50,000. Fine. After evaluation of the misstatement, the audit team concluded that the misstatement are material but not pervasive in the nature. Hence, the audit team decided to disclose the information regarding misstatement of valuation of inventory as emphasis of matter paragraph in audit report. So they wanted to discuss report as in EOM paragraph. As the audit team concluded that this matter requires attention of the user and is fundamental to the understanding of audit report. Kindly guide the audit team regarding the necessary disclosure to be made. Okay, made in audit report by selecting appropriate option from below. So misstatement in inventory requires user attention. As a result, it is a fundamental to the understanding of financial statement and should be disclosed as a key audit matter. Misstatement in inventory is material but not pervasive, hence requires qualification in audit report. Misstatement in inventory according to the auditor judgment is significant, okay, and should be disclosed as a key audit matter. Misstatement in inventory requires user attention, okay, and hence should be disclosed as an emphasis of matter paragraph. So what is the correct option from 1, 2, 3, 4? With the reason. Again, correct option with the reason. Come on, guys. With the reason, which is the correct option? So you think about what is the nature of the item and how it is required to be disclosed. What is the nature of the item and how it is required to be disclosed? Come on, guys. See, this is a misstatement, that is for sure. So there is a misstatement of 5 lakh. It is above performance materiality. Okay, means this is material. This is above performance materiality, means it's material. Now, if this is material and this is a misstatement, but not pervasive, why not pervasive? See the total value of inventory. It's not that much pervasive that it can impact my financial statement to a major extent, to a substantial portion, because inventory is higher amount. So it is material but not pervasive, and hence this requires as a qualification, not key audit matter, because key audit matter is not a substitute for my qualification. Same way, other matter paragraph and emphasis of matter paragraph are not the substitute for qualification. So this should be reported as a qualification. Clear? So basic, if it is misstatement, it's a misstatement, it will go as a qualification. It will not go anything else. Clear? Any doubt? Okay. So there is one more question that I want to discuss on the same line, that is related to the SF 705, 706 and 701. So it will cover all the three. Okay. You have been appointed as an auditor of Dharamnath Sons for FY 2021 as entity other than the company incorporated in the Companies Act. Okay, using a fair presentation framework. So this is an entity other than the company. Okay, Dharamnath and Son is an entity other than the company. So non-corporate entity, you can say. Appointment has been made in the April 2021. The financial statement have been prepared by the management in accordance with the accounting standards. Fine. Okay. Then the management has introduced new computerized account receivable system for November 2020 and still in the implementation phase. Thus, management is in process to rectify system deficiencies and correcting the errors. So correcting the errors and rectification of deficiency is going on. Okay. At the time of implementation of new system, okay, discarded. The earlier system was discarded. The auditor was unable to obtain sufficient and appropriate audit evidence. Okay. About the auditor was unable to obtain sufficient and appropriate audit evidence about the entity's accounting receivable. So they were not able to get appropriate and sufficient evidence about the entity's accounting receivable and inventories. The possible effects of the inability to obtain sufficient and appropriate audit evidence are deemed to be both material and pervasive. So in this regard, write the opinion paragraph and basis of opinion paragraph to include into the independent auditor's report. So you are required to write the opinion paragraph and independent auditor's basis of opinion paragraph. See, as I told you, this is material and pervasive both. So as per the understanding, what should be the case, how it should be drafted, what should be the opinion here? You tell me what should be the opinion in this case. Very important. Absolutely correct, Kaushiki. I am not able to obtain sufficient appropriate audit evidence, and and the impact is material and pervasive both. What should be the opinion? What kind of opinion I am required to issue here? So the opinion that I'm required to issue should be disclaimer of opinion. Reason because not able to obtain sufficient and appropriate audit evidence plus impact is material and pervasive both of not obtaining the evidence. That's why it will be my disclaimer of opinion. Now let us see the paragraph, how it is drafted. So as I told you, when you are drafting the paragraph, you decide the opinion as per SA 705. So opinion SA 705, but other elements of opinion are as per SA 700. So the other elements of the opinion should be from the SA 700. That is, we are engaged to audit the financial statement of Dharamnath and Sons, which comprises the balance sheet, okay, profit and loss account, equity statement of cash flow for the year ended, and notes on the financial statement, including the summary and significant accounting policies. Remember something I discussed in the SA 700, that how we are required to write an opinion, unmodified opinion. Remember something from SA 700 lecture? Let me show you a quick recap of that particular item. So in SA 700, we discussed this particular thing. Remember something? EATNP, that is, we have audited the accompanying standalone, then the company name, basically entity, okay, then the title of each of the balance sheet item, balance sheet, P&L, then your what do you say, cash flow, the title of these statements. Then it comes to the notes, significant accounting policies, and other explanatory information. Remember something we discussed in the SA 700 series? 700, identify the entity, state FS that have been audited, title of each FS, refer the notes, significant accounting policies, and period of FS. So these are the points certain that are each of the statement, it will be same. Then it will come my opinion as per SA 705, that we do not express an opinion on the accompanying financial statement of the entity because of the significance of the matter described in basis of disclaimer of opinion section, and we have not been able to obtain sufficient and appropriate audit evidence to provide basis for the opinion. Same the way we saw sometime earlier in SA 705, an example. And accordingly, they have a basis for opinion over here. That why, what is the basis of opinion? So that is how you are required to write the opinion. Okay. Now, there were two more points with respect to this particular question. So one is, what is the auditor's responsibility to report a key audit matter for which there are no relevant disclosures in the financial statement? So till now we saw key audit matters that have a disclosure, relevant disclosure in the financial statement because we refer to the notes. Now we'll talk about disclosure of a key audit matter, okay, for which there is no relevant disclosure in the financial statement. Okay. So items actually which are require to be reported as a key audit matter are items of the significant nature, okay, and are items of such nature that they have been already discussed with the management earlier. Okay. So discussion and communication is already done with the management for those particular items, and as a result we need to understand the importance, like what was that particular item, what was the nature of that particular item, and why it is not disclosed in the financial statement. So let us see the answer. When communicating matters, okay, when communicating key audit matters, the fact there are no disclosure in the financial statement related to the matter determined to be key audit matter does not relieve the auditor from the requirement to communicate it. Means if there is no disclosure, that doesn't mean we are not required to communicate. We'll still communicate. An auditor may determine that a key audit matter related to the audit for which relevant disclosure do not exist in the applicable financial reporting framework. Okay. So audit matter for which there is no relevant disclosure. For example, implementation of a new IT system. Okay. In the current case, which was there. During the period, there may be an area of a significant auditor's attention in particular if such a change had a significant effect on the auditor's overall audit strategy or related to significant risk. So this was, this impacted on my overall audit strategy because I was not able to obtain sufficient and appropriate audit evidence with respect to the, trade receivables and inventory. And let's say, for example, at the end of this particular audit, instead of not getting the sufficient and appropriate audit evidence, if I would have got the sufficient and appropriate audit evidence, then in that point in case I might think about to include this point into the key audit matters because there was an IT issue. I could not get the details. Initially, I could not get the details on the inventory and accounting receivable. Okay. And later on, by changing my audit plan or by changing the methodology for the audit or performing additional audit procedure, I somehow got the evidence, or I somehow got the basically details about those areas, and hence I am not modifying, but it requires additional disclosure in that particular case. Okay. So if also auditor determines that it's necessary to include information about the entity in order to effectively describe a key audit matter that has not been disclosed by the management, and management does not agree to disclose that information, the auditor should reconsider the adequacy of the disclosure in accordance with the applicable financial reporting framework. Means that if the disclosure was necessary but it has been not disclosed, I need to also consider whether this is a qualification. So as I said, it is totally dependent upon the type of the matter, like which type of matter it is and which particular disclosure it requires. The auditor should communicate the matter as a key audit matter unless or law or regulation precludes public disclosure about the matter, or in extremely rare circumstances the auditor determined that the matter should not be communicated in the auditor's report because of the adverse consequence of doing would reasonably expected to outweigh the public interest and benefits of such communication. So basically it says that that if there is no appropriate disclosure for that particular item and you want to disclose the CAM, first understand whether any disclosure was required as per financial reporting framework. If yes, and if management is not disclosing, then consider the impact on the disclosure and it may become a qualification. So based on the case-to-case basis, you need to understand whether disclosure was required or not. If not required, then how management can disclose this item appropriately. and whether management has disclosed that item appropriately based on the fair presentation framework, not the compliance framework, but the fair presentation framework. Clear? Any doubt? Any doubt with respect to this? Any doubt with respect to this? Okay. If no doubts, then again, I have one more question that I want to discuss with respect to, again, SA 706 only. We discussed one part of this particular question earlier also. So I'll skip that particular part. We'll now discuss the another part of this question. See, the audit report of Colsea Private Limited for financial year 2021 was issued by Bishnoi Company on 25 July 2021. However, case was filed against Colsea Private Limited on 4th August 2021 with civil court with respect to an incident caused in the factory on 17 January 2021. The outcome of which may result in paying heavy penalties. Raj Bishnoi, the partner of the Bishnoi and Company, discussed the said matter with management and it was determined to amend the financial statement for 2021. Further, Raj inquired how the management intend to address the said matter in the financial statement, to which he was told that the said matter will be disclosed as a contingent liability for a court case to the footnote on the balance sheet with no additional disclosure. The management told Raj that such disclosure was enough, as he would further going a description of the said court case and its outcome in the emphasis of matter paragraph in the amended report. So he Mr. Raj was disclosing the matter into the emphasis of matter paragraph. In the context of the above scenario, please answer the following question. Whether Mr. Raj on behalf of Bishnoi Company has properly adhered to his responsibility in accordance with SA 560 that we discussed in SA 560. Now, whether the contention of the management of Colsea P Limited is valid with respect to the disclosure of the court case in the financial statement. Now, so you tell me whether this disclosure is appropriate. They are only disclosing contingent liability for a court case to a footnote in the balance sheet with no additional disclosures. And the management told Mr. Raj that such disclosure was enough, as he would further going a description of the said court case in the outcome in emphasis of matter paragraph. So you tell me whether this disclosure is correct. If yes, then okay. If not, then why, and what should be the appropriate disclosure way? Come on, guys. What should be the appropriate disclosure way in this case, if this is not the appropriate way of disclosure? Okay, good, Kaushiki. what do you think it should be the appropriate disclosure way here? So we are talking about only B point, not any other as of now, that the contention of the management is whether the contention of the management is valid with respect to the disclosure of court case in the financial statement. Okay, so see, in the current case, the disclosure was only contingent liability for a court case, like this much footnote. If you see, there was an incident on 25th of July. Case was filed on 4th August. Civil court with respect to the incidents in 17th January. Okay. Sorry. The audit report was issued on 25th of July. Court case was filed on 4th of August. And incident happened in 17th January. The outcome of which may result in paying heavy penalties. So the outcome, it is saying that it should be which may result into the paying heavy penalties by the company. Now, if the outcome is of such nature that the company might pay heavy penalties, then that should be appropriately disclosed. Okay. If the appropriate disclosure is not made, then in that case, what could be the scenario is, if the disclosure is not appropriate, is not appropriate, then I need to consider whether it's material or material plus pervasive. Here I can only say it's material, not pervasive, because I do not have other information. So I'll go with the material. So it will become point of qualification. Okay. So it will become my point for qualification. Now, if it is become point for the qualification, then disclosing into the emphasis of matter paragraph. Basically, I am disclosing here into the emphasis of matter paragraph. So disclosing in the emphasis of matter paragraph is not correct. Reason because this is something, a point of a, you can say qualification, and we cannot use emphasis of matter paragraph for qualification. EOM should not be used for qualification. Hence, the contention of the management is not correct. They want to disclose, they are saying that, okay, you have disclosed in the EOM paragraph, then that is fine. No, it should not be the case. Okay, so we need to understand whether the disclosure by the management is adequate. If yes, then we can include in the EOM. But if the management itself has not disclosed appropriately, then that's in qualification. And for qualification, we should not be using the EOM paragraph. Here, so the event has actually happened. There was an incident. Okay, so the incident has already happened, resulting in the paying heavy penalty by the company, and hence accordingly this is in qualification. I hope I'm clear. Any doubts? Okay. If no further doubts, then what I'll suggest is, let me take another topic. Okay, very important one. next standard, that is SA 710. Okay. Now, SA 710 talks about comparative financial information. Comparative information, basically. That is something, comparative information that we disclose in the uh, financial statements. So this standard talks about the auditor's responsibility with respect to the comparative comparative information. Okay. Now, basically, if you see the scope of this standard, it says that when the financial statement of the prior period were audited by predecessor auditor and were not audited by us, or were not audited by us, or even were not audited by anyone, okay, then the requirement and guidance of 510 apply to that particular standard, to that particular information, first of all. So it usually applies the requirement of 510 onto the comparative information. Okay, not only on the opening balances, but it extends the application of 510 onto the comparative information. Okay, now the second thing is that this standard talks about few type of information, comparative information. Okay, one is comparative information, that is the amount and disclosures included in the financial statement in respect of one or more prior periods in accordance with the applicable financial reporting framework. That's another comparative information. Then comes the corresponding figures. Let's understand the concept first. Okay, corresponding figures are the comparative information only, where the amounts and other disclosure for the prior period are included as an integral part of the current period financial statement. Okay, so they are integral part of the current period financial statement and are intended to be read with the current year financial statement or current year figures. Okay, now when I talk about corresponding figures, they are disclosed in the current year numbers, you can say, means amounts and other disclosures for the prior period included in the current period financial statement. So if you disclose any number into the current period financial statement as a part of, although they are for the previous year, but you are including in the current period, so that becomes the corresponding figure. And the third one is the comparative financial statement. So comparative financial statement means the comparative information where amount and other disclosures for the prior period are included for the comparison. So if the information, comparative information, is included into the current year number, okay, if that is included in the current year number, that becomes corresponding figures. If that is included in the financial statement for the comparison of the current period, okay, then they become comparative financial statement. But the level of the information, that depends upon the type of the particular number that is there. Okay, so that is the difference between corresponding figures and comparative financial information, financial statement. Now, comparative information is both. Is it both? Corresponding figures also, comparative financial statement also. And when I talk about comparative information, it is the number of prior periods. Okay, amount and disclosure of the prior periods. Now, if I use in the current period, that becomes corresponding figures. If I use in the as a comparison, it becomes comparative financial statement. Clear? Any doubt with respect to the concept first? So if I use comparative information, okay, so if I use comparative information in current year, sorry, if I use comparative information, okay, comparative information as an integral part of the current period financial statement, integral part of current period financial statement, then that becomes corresponding figures. That is known as a corresponding figures. But if we use comparative information for comparison, that becomes my comparative financial statement, not consolidated, comparative financial statement. And comparative, and this comparative information is nothing but amount of previous years. That's it. So that is it. 3 terms that I wanted to explain first. Clear on this? Any doubt? Okay. Now, when I talk about corresponding figures, first of all, when I talk about corresponding figures, when corresponding figures are presented in the financial, when the corresponding figures are presented, okay, as an integral part of the current period financial statement, and they are required to be read in relation to those amounts, okay. Now, there can be a case that auditor opinion shall not refer to the corresponding figures. There can be a case that auditor may issue an opinion that, okay, you are required to, I have audited the current year's number, but not the corresponding figures. Okay, but not the corresponding figures. That can happen. That can be a part of that. But provided if there are certain conditions to that. Okay, there are certain conditions to that particular case. Now, if the amount are, what I can say is, if let's say for example, if the auditor's report, okay, on the prior period included a qualified opinion, okay, let's say for example, there was an audit report of the prior period which was qualified opinion or a disclaimer of opinion, or let's say adverse opinion, okay, and that matter gave rise with the matter which gave rise to the modification. Let's say for example, wrong capitalization of fixed asset that gave rise to the wrong depreciation, and on the basis of which my opinion was qualified in the previous year. Now, that particular qualification of the previous year will come to the current year also, because again, my depreciation in the current year will be wrong. Okay. But what if I including a number of the previous year? Let's say, for example, in fixed asset, I have an opening balance, which is the last year's closing balance, or I give a movement. Remember, in depreciation or in fixed asset, we give the movement: opening balance, addition, deduction, depreciation, net book value. In comparative, in actual, okay, both in comparative, in current year number, both. So let's say for example, if I have given opening balance, okay, now on that opening balance, if there was any modification in the previous year, means there will be a modification in the current year unless and until management has not rectified that modification. Okay, so in that case, what I'm required to do is I'm required to refer to the current period's figure and corresponding period figure in my modification paragraph. Understand the thing? So in that case, I'm required to refer the current period figure and the corresponding figure of the previous period, okay, in my modification paragraph. See, for example, there was an issue in last year that has been carried forwarded in the current year. And if that issue has been carried forwarded in the current year, so when I will write a modification, I will mention, okay, there was an issue in last year and that has been continuing till current year. And hence, accordingly, I am, referring to the corresponding figures also. I'll show you one example. Now, this is one of the audit report where we have a basis of qualification. In basis of qualification, we have two numbers. One amounting to this much lakh for the year ended this, and this much lakh up to this. Non-provision of interest. Plus, they have the group lower by this much amount in March 2022 and this much amount in March 2021 respectively. Means there is a modification where I'm required to quote a number from the corresponding figures. Okay, so March 21 is a corresponding figure. I'm required to quote the number from the corresponding figures in my modification. But when you issue an opinion, do you issue an opinion on 21? Am I issuing an opinion on 21 over here? The consolidated is on 22. I'm not issuing an opinion on 21. I'm issuing an opinion 22. But still, I have included the numbers of 21. That is something the corresponding figures I'm talking about. Okay. So, my auditor's opinion shall refer only to the shall only refer corresponding figures if in previous year, okay, in previous year audit report any modification is there. If any modification is there, then only my audit opinion should refer to the particular corresponding number. Modification can be of the effects of possible and unresolved matters. Can be of because of any matter. Modification can be because of any matter. Okay. So my audit opinion will only be referring the corresponding number when there is a modification, and that modification is coming from the previous year and that requires the number to be disclosed. Clear? Okay. Now, if I, as an auditor, obtain the evidence that a material misstatement existed in the previous year, let's say, for example, in previous year, I did not identify there was an issue with respect to the fixed asset. But in the current year, somehow I got the evidence and I identified while auditing, I came to a came to that identification. Oh, there is a misstatement in the previous year. I issued an unmodified opinion, or there was an unmodified opinion issued previously. Okay, because of which the misstatement is still not corrected. Okay, in that case, I may issue now a modified opinion, and again I will report. I will comment on the corresponding figure in my opinion. So basically, here we are trying to understand when we are required to report on the corresponding figures. Clear? Any doubt? Okay. One more area where we are required to report on the corresponding figures. Okay. In other matter paragraph. Let's say, for example, in previous year, we did not audit the financial statement, or the financial statement were audited by some other auditor. Okay. Either we did not audit, or were audited by some other auditor. In that particular case, we will mention that in previous year, audit was conducted by some other auditor, not by us, or either they were not audited. This is the first time of the audit, and that will be included in other matter paragraph because it is related to the audit, auditor's responsibility or audit report, and it is necessary for us to draw the user attention. Clear? So it is necessary for us to draw the user attention, and there has been change in the auditor, and hence that's why we are reporting the same. I hope I'm clear. So another area for the EOM OM paragraph, where the auditor was different in the previous year. And this is a very crucial area because at that particular point in time, I disclosed in the other matter paragraph about the corresponding figures that I have not audited that corresponding figures, but these have been audited by another auditor. Okay. So that was one of the area where I can use the other matter paragraph. Okay. So other than this, if there is anything related to, the what you can say with respect to your other matter related to the audit or related to the auditor's responsibility, again, you can use the other matter paragraph. Any doubt till now? Any doubt? Let me show you one example if I have this particular about the other matter paragraph. Okay. See, this is one of the example where it was, it was included that the standalone financial statement of the company for the year ended 31st March 7 were audited by another auditor who had expressed an unmodified opinion on those financial statements via their audit report of May 1, 2000. Our opinion is not modified in this matter. Means they are reporting on the other matter, in other matter about the another auditor and about the previous year numbers. Okay. So I'm mentioning the corresponding numbers, corresponding figures in other matter paragraph. Yeah. So there is one question. In whether in both cases that modified and unmodified, will we refer to the previous year auditor? Yes, we will refer. So if it is modified, if it is not modified, still we will refer to the previous year auditor because that is not something audited by us. Clear? Okay. Now let's come to the comparative information. Now, when I talk about comparative information, okay, or comparative financial statement, which includes my comparative information. When comparative information are presented in financial statement, now in that case, auditor's opinion refers to the each period for which financial statement are presented on which auditor opinion is expressed. So if I have a detail for the comparison, and I am also issuing an opinion on that particular comparison one, then that becomes comparative financial information or financial statement. Okay, and I am expressing my opinion on that. Okay, on that particular comparative financial statement. Now let's say, for example, If the opinion on previous year info was different than the opinion I am issuing, again, if I give you a classic example, let's say you are auditing again last 5 years of financial statement because of some XYZ reason. Let's say because of some legal issue or because of some XYZ reason, you are again auditing last 5 years of 5 years financial statement, which were audited by some other auditor. In that case, you are issuing opinion on the comparative financial statement, and there has been an opinion which was issued earlier. Now, there could be a case there is a difference in the opinion. Now, you are saying that it is a modified, earlier it was unmodified. Okay. If there is a difference in the opinion, okay, and if they were audited by procedural auditor where opinion was different, then in that case, what you need to do is you need to mention in other matter paragraph. Okay. If the opinion on the previous year information is different from the opinion issued on previous year information, then mention the substantive reason for the difference in the other matter paragraph because it is related to the audit. Okay. Again, if the previous year financial statement were audited by procedural auditor or were not audited, then mention the same in other matter paragraph. If there was a material misstatement in the previous year financial statement on which unmodified opinion was issued, okay, on which unmodified opinion was issued, then you should communicate the same to the management, to those charged with governance, and you should request the previous year auditor, previous year auditor should also be informed about the particular misstatement. And if previous year financial statement are amended, a new audit report is issued, then auditor should report only on current period. Let's say, for example, you identified a material misstatement in previous year because you were auditing. Then previous year financial statement got amended. Previous year auditor issued new audit report. Then in that case, you are required to only report on the current period because previous year audit report has been issued again. Okay, so that are the requirement for the comparative financial statement. Any doubt with respect to this? Now, if you see this particular standard, this standard basically, talks about obtaining sufficient and appropriate audit evidence, whether the comparative information included in the financial statement have been presented appropriately or have been presented in accordance with the applicable financial reporting framework, number one. Number two, what are the auditor's responsibility with respect to the comparative information, which may be a corresponding figure, which may be a comparative financial statement. So what are the auditor's responsibility? So this deals majorly on the auditor's responsibility. Now, when I talk about corresponding figures, the auditor opinion on the financial statement only refers to the current period. Whereas when I talk about comparative financial statement, auditor's opinion refer to each period for which financial statements are prepared. So that is the difference between corresponding figures and comparative financial statement. Now you might have a question that in India, which framework, which method we use, whether we use comparative financial statement or corresponding figures. See, typically framework that we have currently is based on corresponding figures, that you do not issue an opinion on the corresponding figures which are there in the comparison. Okay. Let's say, for example, I'll show you this particular audit report. You only issue an opinion on the current period, although there are corresponding figures, but you do not issue an opinion. So in India, basically, we follow the corresponding figure approach majorly not the comparative financial statement approach. I hope I'm clear. Okay. Any doubts? Any doubts with respect to this? Okay, if no further doubts, then what I suggest is we'll keep this lecture till here. I will be covering the questions on this particular topic, essay 710, in next lecture, and then we'll cover essay 720, plus we will also cover some topic from the professional ethics. Okay, so we'll also cover one of the topic from the professional ethics. Okay, so if no further doubts, then thank you guys. Thank you for participating in the lecture. I'll see you in the next lecture.